Unlocking the secrets. How the rich legally pay zero taxes. What if I told you that the wealthiest people in the world legally pay little to no taxes? It's not about evasion, it's about using the tax code to your advantage. The rich with their teams of lawyers and accountants understand this better than anyone. Today, I'll reveal the most advanced tax loopholes and strategies that allow businesses and individuals to significantly reduce their tax liabilities. Stick around till the end because I'll share a secret loophole that the ultra-rich use to keep more of their income completely tax-free. Let's face it, the tax code isn't exactly light reading. It's dense, it's complicated, and frankly, it's designed that way. The wealthy, with their high-powered legal and financial teams, they figured this out. One of the biggest differences lies in how the tax code treats active income versus passive income. Active income, the money you earn from your job, that's taxed the highest. But passive income, money generated from investments, real estate, or businesses, that's where the real tax advantages kick in. Depreciation, a perfectly legal way to write off the cost of your property over time, can significantly reduce your tax burden. The point is, the rich aren't necessarily doing anything illegal. They're simply using the tax code to their advantage, playing the game strategically. You've probably heard the saying, it's not how much you make, it's how much you keep. See, when you're self-employed or running a business, you're not just an employee paying taxes. One of the most powerful tools at your disposal is choosing the right business entity. We're talking LLCs, S-Corp, C-Corp, each with its own set of tax advantages and disadvantages. The key is understanding which one aligns with your specific financial goals and minimizes your tax burden. Business expenses, travel, even meals, these can all be written off, legally reducing your taxable income. But as a business owner, you're suddenly deducting expenses related to your entire operation. That's why it's crucial to consult with a tax professional who can guide you through the process, ensuring you're maximizing every legal advantage available to you. Let's talk about putting your money to work for you, tax-free. One of the most powerful tools in this arsenal is the Roth IRA. Now, unlike traditional IRAs where you get a tax deduction up front, with a Roth, your contributions are made after taxes. But here's the kicker. When you start withdrawing in retirement, those withdrawals are completely tax-free. Roth 401(k)s offer the same tax-free growth potential, allowing your investments to compound over decades without the drag of taxes. Then there are municipal bonds. These bonds, issued by state and local governments, offer tax-free interest income. And let's not forget about opportunity zones. This program offers significant tax benefits, including the ability to defer and even reduce capital gains taxes. Remember, investing strategically isn't just about maximizing returns, it's about minimizing your tax burden along the way. Real estate is a cornerstone of wealth building. It offers appreciation, cash flow, and unique tax advantages. Depreciation lets you deduct property value yearly. The 1031 exchange defers capital gains taxes. Becoming a real estate professional offers more benefits. Consult a tax advisor to maximize your advantages. Offshore tax strategies aren't about hiding money or doing anything illegal. They're about legally utilizing the tax laws of different countries to your advantage. For example, did you know that some countries have zero income tax? Establishing residency in these tax havens can significantly reduce your tax burden, especially if you have substantial foreign-sourced income. Then there's the Foreign Earned Income Exclusion, or FEIE. This allows U.S. citizens and residents to exclude a certain amount of their foreign earned income from U.S. taxes. And let's not forget about flag theory. This concept involves diversifying your assets and residency across different countries, minimizing your dependence on any single tax system. It's crucial to consult with experienced tax and legal professionals to ensure you're in full compliance with all applicable laws. It's amazing how many people leave money on the table simply because they're not aware of all the legal tax deductions available to them. Take the home office deduction, for example. If you're self-employed or work from home, you can deduct a portion of your home expenses. Then there are vehicle expenses. If you use your car for business purposes, you can deduct a significant portion of those costs. The key is to stay informed, do your research, and consult with a tax professional. Charitable giving isn't just good for the soul, it can also be a smart financial move. One way to maximize your charitable impact while minimizing your taxes is by setting up a private foundation. This allows you to make tax-deductible contributions and control how those funds are distributed to your chosen charities. Donor-advised funds, or DAFs, offer another flexible and tax-efficient way to give. You contribute to the fund, receive an immediate tax deduction, and then recommend grants to your favorite charities over time. Remember, charitable giving isn't just about writing a check, It's about strategic planning and maximizing your impact while minimizing your tax liability. Family can also be a powerful tool for tax optimization. The tax code allows for income shifting, which means you can legally transfer income to family members in lower tax brackets. One way to do this is by hiring family members. If you have children or a spouse who can contribute to your business, paying them a reasonable salary can shift income to a lower tax bracket. Setting up trusts for wealth transfer is another powerful strategy. Trusts can help minimize estate taxes and protect your assets for future generations. And let's not forget about 529 college savings plans. These plans offer tax advantages for education expenses, allowing your investments to grow tax-deferred and potentially be withdrawn tax-free for qualified education costs. Family tax strategies require careful planning and adherence to IRS rules. It's essential to consult with a qualified tax advisor to ensure you're maximizing your tax benefits while staying on the right side of the law. The stock market can be a roller coaster, but one thing's for sure, taxes are inevitable. However, with a little bit of strategy, you can minimize your tax bite and keep more of your hard-earned profits. One powerful technique is tax loss harvesting. This involves selling losing investments to offset capital gains, effectively reducing your overall tax liability. Understanding the difference between long-term and short-term capital gains tax rates is also crucial. Holding investments for longer than a year can significantly lower your tax bill. And for small business owners or those invested in startups, the Qualified Small Business Stock or QSBS exemption can be a game changer. This exemption allows you to exclude a significant portion of capital gains from the sale of qualified small business stock. Navigating the complexities of capital gains taxes requires knowledge and expertise. Consulting with a financial advisor or tax professional can help you optimize your investment strategy and minimize your tax burden. Alright, we've arrived at the final and arguably most powerful tax loophole used by the ultra-rich: borrowing against assets. This strategy is so effective because it allows you to access your wealth without actually selling your assets and triggering capital gains taxes. Here's how it works. Let's say you own a portfolio of stocks or real estate worth millions. Instead of selling those assets to fund your lifestyle, you can borrow against them, using the assets as collateral. The interest you pay on the loan is often tax deductible, further reducing your tax liability. This strategy allows you to maintain ownership of your assets, benefiting from their continued appreciation, while simultaneously accessing liquidity without triggering a taxable event. Consulting with a financial advisor and tax professional is crucial to determine if this strategy aligns with your overall financial goals and risk tolerance. Paying zero taxes legally is about understanding the tax code and using it to your advantage. The rich aren't breaking laws, they're following them strategically. They're using every legal tool and strategy at their disposal to minimize their tax burden and maximize their wealth. But here's the good news. You can too. Start implementing these strategies today. Talk to a tax advisor, optimize your investments, and structure your income wisely. The information is out there. You just need to take action. Remember, the key to wealth isn't just making money, it's keeping more of it. And with the right knowledge and strategies, you can achieve a level of financial freedom you never thought possible.